Hello and welcome to program 88, and program 88 is all about relative volume. Now if we look at the standard TradeStation program, you'll see that relative volume is defined as the volume minus the average volume. So for example, for a weekly or daily chart, that's going to be equal to V volume minus the average volume, and that is plotted on the chart. This is according to the TradeStation indicator. Of course, there are different ways of defining this. And then because we use different keywords for volume, for a minute chart, for example, we would use the keyword ticks. So we'd say tvol equals ticks, and we'd say the average of those ticks, and we'd say the relative volume is tvol minus the average volume, and then we plot that on the chart. Now the Markplex version of this is not too different, but it has a slight difference. So for example, if we were plotting for a weekly, daily, monthly chart, our calculation would be essentially the same. We've got the volume, we've got the average volume, and we're plotting the relative volume minus average volume. And then for minute volumes as well, minute bars as well, we would do the same thing, except in this case the keyword would be ticks. So we're taking the relative volume would be equal to volume minus average volume. So far it's exactly the same, but the difference is we've got this this slight difference, and that is for the minute bars. What we're also doing is saying, well, if we take what the volume was for this bar today, yesterday, the day before, and however many days we want to go back, we could take the average of those values and use those in the calculation. And that is what this program does. So for example, if we look at the chart, you'll see here we've got, for a minute chart, we've got the standard bars. These are the narrow ones, this magenta or fuchsia, in this case color. We've got the orange, but then we've got these wider bars, and these are the bars that are using today's volume, the volume a day ago, the volume the day before that, and so forth, depending what settings are. So in this particular case, if we go to the studies and double click, you'll see that the length is 4. So we're going to do today, yesterday, the day before that, and the day before that to calculate this new value. But we'd also use that 4 as the input to the moving average function to work out the moving average. So we've got in effect both. So for example, for a weekly chart, we would only see one plot here because we're not plotting the values going back any particular time. Doesn't make any sense for a weekly chart, so we're just plotting the values of the volume minus the average volume. So that should be exactly the same as the TradeStation equivalent. But for a minute chart, you'll see that we have what would be the standard, and also the plots for this new methodology, this different methodology, which uses the volumes at the specific time, the number of days before defined by the input. And then if you were to go back to in the chart, you'll see that at a certain time, because we need the input number of values, that this actually stops calculating. So you'll see there we don't have any of the bars that we were showing later on. In other words, the cyan and the green bars, and that's just simply because we don't have the number of days. So just to spell it out a little bit more clearly, with the methodology that this program includes, for example, at this particular time, 12:46, if the input was set to 4, we would use the volume for this bar, then we'd use the volume the day before at 12:46, the day before that, or the trading day before that, 12:46, and the day before that. And that is what we'd plot with the slightly widened bar here for the minute charts. As far as the program's concerned, there are several things that you might find of interest, and particularly using the dictionary, using vectors, and determining the colors, because we're using this function, TradeStation function, my colors, which allows you to use a wider gamut of colors. Anyway, hopefully you might find this useful. If you do, then and you're not already, please consider subscribing to Markplex.com and also the Markplex YouTube channel. Thank you very much.